Let us continue our discussion about the economics, but this time I am going to ask a question for Victor. Victor, what do you understand under supply and demand?
Let me think. I think in rugby, the supporters always demand for us to be successful and to beat the Australians. And we have to supply them with a victory. So I think that's probably close to economics, maybe.
I guess that's close enough.
Dawie, what's economic growth and what affects South Africa's growth?
That's actually the most important question in economics. What is this thing called economic growth? Economic growth essentially is the rate at which we produce stuff in the economy. That's goods and services. Like, for example, if you're a maize farmer and you produce 100 bags of maize 1 year and you produce 110 bags of maize the next year, then your production increased by 10%. And there are many things that affect South Africa's production. Like, for example, the interest rates or demand, or, for example, the price of gold. So all these sort of things affect each other, and eventually it affects economic growth in the South African economy.
What is economic policy? Who sets this in South Africa and how does it affect me?
Well, economic policy is set by the authorities. Now, there are many authorities in South Africa, like in any other country in the world. Like, for example, we've got the government, we've got the central bank, and we've got the Department of Trade, for instance. They all have different policies. If the minister, for example, decides to increase taxes, it will affect your own disposable income because you will have to pay more taxes. If the Reserve Bank, another authority, decides to increase interest rates for whatever reason, it's going to impact on your mortgage payment that you have to do every month to the bank, for instance. So all these different policies of plans by the different authorities affect you personally.
I know that the South African Reserve Bank is the central bank of South Africa, but what is the bank's primary purpose?
Well, central banks are actually fairly new animals. They're only about 100 years or so old, including the South African Central Bank. The primary purpose and function of a central bank is to do what they're supposed to do, and that's to provide money to the economy. But they've got certain policies and certain targets as well. Like, for example, the South African Central Bank has to make sure that inflation remains within a certain set band. But the South African Reserve Bank is also responsible through monetary policy to make sure that the rand remains or retains its value in order to ensure economic growth. And on top of all of that, the South African Reserve Bank is also responsible to make sure that our banking system remains healthy.
So Dawie, the Reserve Bank, can they just go and print money? Or how does it work? If they print money, does the inflation go up or down? Tell me more about it, please.
That is actually an excellent question because very, very few people understand this. Very few people understand what is money. What is money? Money, the official definition for money, is that something that is generally accepted as money. So if we decide that this glass is going to be money from now on, or glass is going to be money, then you and I will accept money or glasses as money. In the past, we had gold, we had camels, we had women, but they were too expensive. So how does it work in practice? The Reserve Bank today will create some money, they will print some money, they will put it into the system, in the financial system, and that money will be lent out by the banks, and it will be deposited back at the banks, and it will be lent out by the banks and deposited back again. So there's a circular movement. You get two kinds of money. The initial money created by the central bank, and then the private sector will take this money and in a way make it more. By lending it out and redepositing at the banks again, the money supply will go up. And the Reserve Bank tries to affect this money supply by making the price of money, called interest rates, by moving it up or down. And we can measure whether the Reserve Bank is successful in what they are doing by simply looking at the inflation rate. Next week, we talk money, money, money.